Yeah, I have it here.
Can you see me or no?
I can see you. Yeah. All right. Yeah. Second.
Awesome. How is it hot over there? Weather?
In Santa Monica.
Yeah.
It's kind of hot. It's probably in the 80s, so it's a really nice day out. But we get to be stuck at home as always.
107 here, dude.
107.
Yeah.
Oh my God, that sounds pretty terrible.
I told Tessa, let's get out of here. It's actually 108.
God, yeah, you really should go back to
We
Playa.
are.
Sounds
We are.
sounds way better.
We're going back Thursday or tomorrow or Friday.
Yeah, that's funny. Escape to get back out. Ben, you good? I can't hear you. I think you're muted.
Got to get my lighting. I'm all good now.
You go.
Yeah, I do not want to be in 108-degree weather. That's for sure.
Worst thing ever.
Dude, I think I have a thermometer on my pool. The pool is 98 degrees.
With no, wow, that's insane.
You can't even go in the pool to actually get cool.
Yeah, no, you can't. You got to be inside the whole time, basically.
It's like, what's the point of going out if you got to stay inside the whole time?
No, it's not supposed to be this hot. Like it was beautiful last week.
Yeah, for sure.
Yeah, can change any day. I'm excited for this, guys.
You guys saw Lyft taking off after earnings, up 13-14%.
Yeah, I think it's probably making up what it was down just the past 4 days.
Yeah. they announced cuts to the staff last week, I think it was, and then Uber did it today or yesterday.
Yeah.
So they probably just like, okay, well, we had that news out of the way already.
Yeah, I'm honestly just happy for like employees wise for them that like earnings were good because I mean at least revenues were a surprise. So I don't want to see a bunch of cuts there.
How were earnings good? Who's taking Lyft right now?
I mean, just think about it, right? Just because we're not counting, they weren't as affected this quarter because it hasn't hit yet, right? Next quarter is going to be the bad quarter. So,
but I also wonder if the people who are taking public transportation,
that's totally,
are taking Lyfts and Ubers now.
It's a little bit more. Yeah, I guess.
Plus, I mean, not Lyft per se, but I do imagine Uber Eats is, assuming they can make any money on Uber Eats, which I don't know that they can.
I don't think Uber Eats is making money.
None of those services make money, unfortunately. No. I don't know. It's like the more they do, the worse it gets.
Grubhub, I think Grubhub reports today. I think they may be making money. Oh, Instacart became profitable, but the volume was 5 times what it's supposed to be. So that's how we.
Yeah.
Well, yeah, they're starting to figure out. I mean, I feel like there was like no fees and everything was a promotion every time switching from app to app, and like it's just not the case anymore. Like you look and there is actually a fee that you're paying every single time, and it's real. And I don't know if you guys have the Chase Sapphire, DoorDash, it's like way more beneficial. And so all of my friends have all completely switched to DoorDash. That's what everybody uses.
I have both DoorDash and Sapphire. Was I supposed to get a discount?
How do you? So DoorDash is also an app?
So yeah, DoorDash, you can pay for subscription and it credits you the subscription for a year.
Got it.
So then that gives you like discounted delivery fees or whatever. And then I think it's instead of 3 times points, it's 5 points. So for every $100 you spend, you get $7.50 in travel, I think is, ultimately what it comes out to be for all that travel we get to do.
Well, I've been using DoorDash, so that's good. So I can get credited for that. So
Yeah.
I just want to let everybody know, the people who are on, we're going to start at 3:05 just to give people some time to trickle in. So that's kind of why we're just having random conversations. So hopefully you guys are finding it at least mildly amusing.
Well, I'll chime in on that.
Go ahead.
So worth mentioning, DoorDash has Bay Cities. So not only sandwiches, but the entire grocery and alcohol section are available. And yeah, I discovered it because of my Sapphire Reserve perks.
Oh, that's
There you
sweet.
go.
That's sweet.
The Reserve, there's something about that card. I don't think there's ever, I mean, I don't know. I wasn't old enough for the good old Amex days, but I just, there's so much hype around the Reserve, and it's hilarious. It just feels like it's a total special card for sure, where people usually don't care about their credit cards as much.
Well, I'm older than you guys, right? And
yeah,
the Platinum Amex used to be that, man. I don't know what happened to it.
Sapphire's Amex for we young people. You know how I like to pretend I'm young still.
Exactly. We know you're a millennial deep down.
Nope.
Yeah.
I'm secretly a Gen Xer masquerading as a millennial, or the opposite. I'm not sure. All right, so 3:05. I think we can get started, guys. I wanted to just kind of introduce all of us. My name is Eyal. For those of you who don't know me, I'm one of the managing partners here at Gerber Kawasaki. I'm joined with my partners here, Hatem and Ben. We're going to be taking you guys through some of the ideas that we have about the economy and investing in this hopefully coming soon post-COVID era. But some things to think about, and who are some of the winners and losers of this unfortunate incident, and what to think about. So with that in mind, I'm going to introduce Ben here, and he's going to give you guys a little bit of a background on some, actually, Ben, why don't you just go ahead and introduce yourself?
Yeah, definitely. Hey, everyone, Ben Dunbar. Despite the receding hairline and everyone calling me grandpa, I'm the youngest partner at Gerber Kawasaki. I transitioned from son to grandfather to brother. I never know what I'm at. Yeah, just to get the disclosures out of the way, always the fun stuff first. We're going to be talking about individual companies specifically in some instances, and we may or we may not own these companies. Our positions may change in these companies in a day potentially. And so just first things first, like, don't act on anything you hear today. Like, consult your advisor. I think the majority of you here have an advisor at Gerber Kawasaki, so consult them. If you don't, definitely come talk to us. And with that being said, want to start off just very brief on what's going on with Corona, and then a lot of people have asking, like, have we seen anything like this before? And so right now, I kind of wrote this like a week ago. The world has stopped, and I would say it's changed a little bit. The world is slowly moving. The U.S. is slowly moving. We've seen over 4 million cases of Corona. Over 250,000 deaths, unfortunately, and it's weird because the government has basically shut down businesses and forced people to stay at home. And have we seen a pandemic like this in the past? We've seen other massive pandemics, like Spanish flu of 1918 is a big one. 25% of the world population was actually infected. Then we had the Asian flu, the Hong Kong flu, and the swine flu. And those are some of the major pandemics that we've had, but never have we had the government have such a forced shutdown. So we actually don't have too much of a basis of comparison of what things would have been like if everything had stayed the same, if social distancing wasn't practiced. And so right now we're getting news daily, obviously. A lot of us are in California. Newsom's looking to start beginning opening this week, Friday. We've seen Florida, Georgia open a little bit quicker. And so we're definitely in a little bit of uncharted territory right now with pandemics, but the market is always in some form of uncharted territory, but in some ways much of the same. And with that, I'm going to go ahead and actually share my screen real quick on one of my favorite reads that comes out every single month. So Hatem and Eyal begged me to not be too technical, so I'll do my best. I can get wrapped in the numbers, and so can these guys, but we tend to focus on the qualitative. But BlackRock, largest asset manager in the US, in the world, company that has a lot of resources that we use. And basically they send out the student of the market every single month. If you want us to share the whole presentation, we can with you, but wanted to go over 2 slides. So this year, I didn't know if you guys know, but the market's been relatively volatile. Looking, it's an understatement. So this chart right here, it looks at the number of single day stock movements of either up 2% or down 2%. Okay. Over the past 20 years. Okay. So we'll mark the financial crisis. We had 72. That was the biggest one we've seen, quote, so far. So far this year through April, we have had 31 either plus or minus 2% days, and that puts us on pace to do roughly 93 this year. So I think this is a funny stat too. 16 of them have been negative, 15 of them positive. I bet if you would have surveyed the group, people would have guessed a bit more negative relative to positive. So we've definitely seen a lot of volatility this year. We don't necessarily expect that to go away because there is a lot of uncertainty, and we're continuing to digest new information regarding this virus, regarding how reopening both in the US and how the world monitors it. So one more page I'm going to look at, and then I'll get out of the numbers. These charts right here, it looks at the best days and the worst days, the best months and the worst months for the S&P 500 since 1950. Okay. So we talked about volatility this year. Over the past 70 years, okay, we have seen 5 of the best 15 days percentage wise in the stock market. Okay. 5 of the best 15 days. Okay. We've also seen 3 of the worst 15 days in the stock market. Okay. So we are in very volatile times, and it's calmed down a little bit for the past couple of weeks, but those of you that which I think is everybody here invested through that time, we're obviously dealing with a lot of volatility. Now this to me is even more interesting. Okay. March was terrible, right? We're kind of in this peak worriness of what's going on. March market was down 12.4%, the S&P 500. Okay. 4th worst return for a month over the past 70 years. Okay. Right when we started reporting all those unemployment claims, jobless numbers, all that stuff, we had April, which made the majority of your return right back. 3rd best month for the stock market in over 70 years. So it always reminds us that the market can be challenging. It's hard to predict over the short term, and you never really know, like week to week, month to month, how necessarily the market's going to react. And so with that being said, we're going to dive into a few of these industries, as AL mentioned, and a few of these companies, kind of talking about, what companies can do pretty well through this, what companies are probably not in the best position, but maybe not out of the woods, and then companies that are going to likely continue to struggle. And then with that, we'll start with entertainment. And AL, I'll let you jump in, and you're coming in a minute. Don't worry.
Thanks, Ben. Good stuff. I'm glad it wasn't. I'm glad we just touched on that stuff, but always good to know. So yeah, this, like Ben was saying, there are definitely winners and losers in this economy right now, and we've seen it we've started to see it very clearly what's happened over the last couple of months, but we think this is going to continue on. So. Thus the title of The Good, the Bad, and the Ugly. It had nothing to do with the 3 beautiful people that were on this flyer.
Thanks, Al.
Yeah, no problem. I lobbied to get myself in The Good. So with entertainment, The Good, I'll handle The Good, and then we'll kind of trade off and we'll have a discussion here. But The Good is the ones that we think are obvious, that have already been good. We think will continue to be good. Netflix, obviously, being the big one. To me, they are by far the biggest winner in this game. Last quarter, the market was expecting them to add 8 million new subscribers, and they added 15 million. It's kind of, they're off the charts as far as what they're doing. But all the streaming services, Disney Plus is basically, Disney is kind of the only shining part. Disney Plus is the only shining part of Disney right now. They're up to about 35 million subscribers right now. Hulu's doing really well. Even ESPN Plus, despite the fact that there's not really any sports going on, there's content that people still want to watch there. So that's a big one.
Isn't there too many streaming services? I'm going to play devil's advocate.
Yeah.
First of all, thank you everyone for tuning in. I am the oldest partner in the firm. And actually what we're trying to do here is really kind of give you an insight of some of the discussion that we have on a daily basis. And that's kind of what we try to, how to pick the companies and the industries that we like. So I thought it'd be fun for us to share this with us, our friends and clients, and then we do more of those. But I mean, I get this all the time. We live in Hollywood. We live in LA, right? We're close to this stuff.
Sure.
And then it feels like there is too many of them.
Well, first of all, I agree with you. There definitely are too many streaming services. So while I would say yes, I think the ones that stand to win are the ones that have been here and are run by the big juggernauts, right? So I don't know if anybody's running out to get Peacock from Comcast or even HBO Max, but I think people are getting HBO, Netflix, Hulu, Disney. Like, these are the ones that are going to survive. And I don't know what's going to happen with Quibi. You know, I personally, I haven't seen it, and I don't really know anybody who has.
I downloaded Quibi.
You said you downloaded it. You're the one person in our office who did it. So did you watch anything?
I watched one episode of one show, and that's it.
So how was it?
It was pretty good. It was I forgot the name. It was pretty good. It was an 8-minute. It was an 8. It's definitely a format that is made for an iPhone, which is kind of, it's fun if you're just on the go, but I don't know if they're going to be lasting for a long time. So
yeah, I don't know. Like, to me, if I'm on my phone, it's YouTube, right? So to me, YouTube is the big winner, and we saw that in Google's last earnings call. Advertising revenue was, slowing down, or whatever, but YouTube is actually doing a great job right now, because that's what people are doing right now. We don't really have anything else to do, and YouTube will continue to be that driving force in the future. So with that being said, kind of similar to that, video games is another huge one, and not just the playing of video games, which we've definitely seen. So Activision, who, if some of you guys know, has the Call of Duty franchise, World of Warcraft. Activision just had amazing numbers also. They have these microtransactions now because you can play games for free now without buying them. But they did almost $1 billion in revenue just from these microtransactions last quarter. Crazy. It's kind of crazy.
Insane.
EA did, had good numbers, not as good as Activision, but still great. There's a new game from Riot called Valorant, which isn't even out yet, and has 1.7 million people streaming the beta version on Twitch, which is insane. So Twitch, which is owned by Amazon, Mixer, which is owned by Microsoft, and YouTube, owned by Google, right? So the three of the big tech companies are all making their push. And I think this is really the time where streaming and video game playing really comes to the forefront, and is not just a niche product anymore, but is really kind of normalized in society. And even I have an Xbox, which I never play. I've turned it on like several times since quarantine started, for sure.
Bringing some gamers back.
For sure, yeah. So that's kind of my thing on, I think these guys are definitely the winners in this economy, and not just right now, but going forward, because I think this is going to propel them. I like to give the analogy of some of these sectors having had their last little piggy, and this, unfortunately, this like hanging on by their last little piggy, and the coronavirus is unfortunately the foot that comes in and steps on and knocks them off the ledge. And the giants like Netflix and Disney, I think, will actually benefit from all of that.
Yeah, awesome. And then just to add on the video game side, I mean, back in the day, going to Best Buy to buy a video game, and right, all the costs it cost to package it, and then you got to deal with Best Buy. Just the direct download is just straight increased margin for those companies on top of that. So it's awesome. Sure. So I'm tackling the bad kind of in the middle. So the traditional bundle cable subscriptions are continuing to lose market share. So it's you asked, like, aren't there too many streaming services? Well, the answer is a lot of people aren't watching cable because they're trying to watch as many streaming services as they can. So, people are continuing to find other ways to consume content, and companies are trying to adapt. And one company that jumps out to me that I think is interesting is Comcast. And Comcast has the cable side of the business that's not doing great. It also has NBC Universal, and recently, kind of the good side of the thing, good side of things, they released a movie called Trolls World Tour. If you have young kids, you've probably heard of it. And it was the first movie they released direct to consumer, just through a rental. So it was $19.99 rather than going to the theaters, and it was super successful. So that movie, the original Trolls, did about 116 million in its first year in the theaters. This Trolls World Tour, first 3 weeks did over 100 million direct to consumer. Okay, people paid $20 to do that, and so then you think, you're like, oh wow, what a great opportunity for a company like Comcast. Like, again, better margins going direct to consumer, but AMC
wasn't very, movie theaters were not very happy with that.
That was exactly what I was gonna say, and so and so that is exactly what happened. Is movie theaters were not very happy with it, and what happened is AMC now said, "We'll believe it when we see it." And no one's even going to AMC right now, but they basically banned NBC Universal, and they basically said they're not going to show their movies at their theaters anymore. Now, AMC is gonna, and I know Tim's gonna get into the ugly, and AMC fits into that, but these companies like are need to figure out ways to adapt and need to be ahead of the game. And the Netflixes of the world, Disney releasing Disney Plus, like they are way more on top of it. It's just Comcast, like those kind of traditional bundled services, like they just feel a bit behind, and just, even trying to get someone to come out to your house when your internet doesn't work from one of those companies and the cable doesn't work, it's just an absolute nightmare. And so, they got the little bit of pluses and minuses, but yeah, Tim, going to the entertainment, I know you have a bunch of clients, a lot on the entertainment side of things, and obviously, we all live in LA. What's the ugly?
I mean, we obviously living in LA. We've seen kind of a renaissance for entertainment over the last 3 to 4 years. All these streaming services coming in and overpaying for production, and our clients were benefiting from it. So we love it, and we own Netflix and Amazon, and all these companies have done really well for us. But when you think of the ugly, it's truly the movie theaters, right? It's as Eyal said, it's a business that was dying already, and then with COVID, with not being able to basically do social things, I think movie theaters are really the worst place to be. You're gonna see a few of them go under. There is no doubt. I think I was looking at Cinemark. They have almost $4 billion in debt, and the market cap of the company is $500 million. So how do you survive as a movie theater if you can't have people in, right? Social distancing. I mean, every 6 feet, so you gotta have less than half what you could have before. So I think that's a big loser.
So question.
But I think
yeah, go ahead.
Real quick, what do you think? Because last year there was a law where studios couldn't own theaters, and they reversed that law last year.
Right.
Probably because movie theaters are dying before this.
Right.
So what do you think about Disney or Netflix? I'll be honest. I used to love going to movies all the time, and I'm going to disclose here. I'm a total sucker for the Marvel movies and all those like cheesy movies that make a lot of money but aren't very great movies. But that's okay. Those are the only movies I would ever go to the theater for. Like, I don't need to see a random thriller. So what do you think about Disney or a Netflix coming in and scooping up, an AMC or something like that?
I think that's always going to be need for that cinematic experience. It's the beautiful movies that you go that are shot in one take, or the big movies like the Marvels where there's a bunch of explosion and they're all experienced. Like the experiential movie will always have a niche, but the way that it is distributed today is not going to survive. Yeah. So you're going to have, on the high end, I think, you're going to have Disney or maybe, some of the Netflix come and buy some of these movie theaters, and they will have, they release their big blockbuster on these theaters, and people will come in and watch them and be maybe part of their subscription or pay extra for it, but you're not going to have thousands and thousands.
Right.
But Disney, it's I mean, if you think about Disney last year did about $6 billion in revenue from box office, which was about 60% of the box office. So the theaters is a really huge part of their revenue, and that's gone. But if you see the Trolls doing 100 million just on release, and you can't really go to the theaters right now, and Disney had their earnings this week showing how tough it's been without having movies out. They got to be thinking about how that's going to factor into their future growth. But also, Netflix kind of talked about doing this. I know it's against the way that they want to do things, but I think eventually it's going to be compelling enough for them to go and buy one of these theaters. I think there is a post-COVID world where, I mean, unless we find a vaccine, which is not an easy thing to do, it's going to take some time. Hopefully we do. But unless we find a vaccine, our worlds have changed. And I think a lot of us are not going to be comfortable going to the theater for a while. But what we do, it's going to be a different experience. IMAX kind of falls in the same. They've also been struggling for a while. Their office actually is in my neighborhood in Playa Vista. I feel like the building is probably more expensive than the company at this point. But that's a company that's struggling. I mean, I think they have a good experience, but running their own theater is not going to be profitable going forward. The parks, that's going to be ugly too. Like we were talking about Disney. Disney does, I think, 33% of their revenue from parks, and it's a cash cow. That's most of their cash flow. They're closed. They've been closed for a while now. What do you do? What do you do when you reopen? Like, are you going to have a full park? Absolutely no. It's going to be 25% or 50%. I think in Hong Kong they're talking about having only 20% or 25% right now. That's going to be problematic because the parks are not going to be profitable for a while, right? But what? Go ahead.
Hatem, real quick. Sorry, we're just I want to get a little bit moving because parks are definitely a thing, and we'll talk a little bit more about travel and leisure also. But I kind of want to move to the next one just so we make sure we have enough time because we do want you guys to submit questions. So if you guys have questions, please enter them in the chat, or you're welcome to wait until the end. But we will definitely get to questions at the end. So we got Hatem. Thanks for that, first of all. And so I want to talk. Ben, I'll shoot it back to you, and we can talk about the good on your side there.
Yeah, definitely. So on the retail space, Amazon is in a literal prime position. No pun intended. Thanks for that one, AL. And
no worries. Bad puns.
I love that. I love the dad joke. So so here's what we got. So you have Amazon Web Services that is just dominating. That's not what we see as regular consumers. Like, that's not us ordering or anything. Amazon Web Services is powering the cloud. So all the time being spent on Zoom right now on this video right here is happening because of Amazon Web Services, as well as Azure for Microsoft. So what's happening is that is a super profitable business for Amazon. So what that is allowing Amazon to do is Amazon is basically setting themselves up to continue to basically get you everything that you need. Right now, the grocery store already wasn't really that great of an experience. Now that more and more people are starting to order online and get direct delivery, Amazon's going to know you substantially better. It's just going to be a lot easier to order from Amazon. And yes, maybe there's still the quick neighborhood grocery runs. We love our local groceries. We always want to support our local business, but Amazon definitely knows us and knows what we want. And more people are getting used to basically being able to order from Amazon. So they're obviously in a great position from a retail perspective. Another company that really like from a retail perspective is Target. Target has done an amazing job evolving their business from just being this brick and mortar grocery to being a legitimate online presence. I think it's for the last six or 7 years, they've grown their online revenue by 25% each year. And it's actually still less than 10% of its total revenue. So Target right now, like, they're putting the right people in the right places. They're figuring out how to be effective and efficient with their business. And there's something about Target, like people have such a loyalty to Target, and like they're setting themselves up to be in pretty good position.
Don't you think though having all these stores is a problem for Target?
Well, it's a good question, because they're doing so well online. Those stores can become warehouses for all their stuff. And who right now is
those are some expensive warehouses, man.
Well, here's the thing. They probably have the ability to negotiate, because you tell me, Atem, who right now is going to go rent out some real estate space that Target has, right? Who has an idea? Maybe it's Amazon Web Services and they set up a bunch of computers, but they can set that up in way cheaper places. So they'll likely have. What'd you say?
Plus, how much toilet paper are they selling?
Yeah, no, they're killing it on the toilet paper. They're doing all that, and they're set up really well. And then I'll just touch super quick, but a lot of the direct to consumer products that we see, like more people are comfortable buying their Apple iPhone. And people are getting the no contact delivery for their Tesla, especially once Tesla's factory gets up and running again. And so companies that have been set up to do direct to consumer on the retail side are in a pretty good position. And so with that, I'll let Atem speak to the bad and some areas that aren't as attractive.
It's obvious, right? It's basically your mall stores, right? Your traditional mall, your big box retailers. I mean, the malls were already dying, but this is definitely the last bullet, basically. I think Westfield or malls that have more of an experiential element, like the Century City Mall or down in Laguna, they have a nice mall too. I think Fashion Island is called. Those will do well, but that's an easy one. For me as far as bad. And again, the real estate there is going to be interesting. Like what's going to happen with all those big boxes?
Yeah. I mean, I agree with you. We're definitely thinking that the malls, and again, we've kind of seen it already. If you live out in LA like we do, you've seen Century City and the Palisades try to convert their traditional mall space into a more experiential. So I think that evolution continues. I think ultimately the mall size has to shrink, but to me, the biggest losers in this game is your big box stores, your Macy's, your Nordstroms. You're talking about enormous square footages of places with nothing to do with them, and nobody wants to didn't want to go to these stores before. Unfortunately, my brother is an executive at Macy's. So I have some sort of anecdotal information here about, and remember, none of this is non-public information. So, but Macy's furloughed 125,000 people, and now they're charged with the task of how are they getting all these people back to work in a time where people don't want to go to these stores. So I really think companies like, we've already seen it with Sears in the past, and now JCPenney was happening, and now it's Macy's and Nordstrom. Barney's goes out of business. These companies are done. Sorry about that, guys. So I think they stand to lose. I don't see Macy's coming back in any meaningful way from where they are right now.
Yeah.
What do you think? I mean, I picture walking into a Macy's and I picture walking into a Nordstrom's, and I mean, the Macy's is such a nightmare. Everything is everywhere all the time. It's crowded, it's hectic, but Nordstrom seems to be like at least transitioning to like their online business a little bit better, and like sell a little bit higher margin products. So maybe not as bad as Macy's.
I agree. On the hierarchy,
still bad shape.
Yeah, and the hierarchy was like, right, it's like your JCPenney, and then you got Macy's above them, and then you got Nordstrom is probably the best of that bunch, but that's the cleanest shirt in a dirty laundry basket, so to speak.
Yeah, it's a clothing store. So
about experience, guys. It's going to be about experience.
Yeah, totally.
No matter what you do, it has to be a superior experience.
Yeah.
Let's talk a little bit about travel. Let's move on.
Yeah.
I'll take the good. I think like everyone probably here, I'm yearning to travel. I'm yearning to go back to some kind of vacation, someplace out of town at least. So there is definitely pent up demand. The question is, are people comfortable to get on a plane and get somewhere, right? And that's really what we need to figure out. with how these airlines are going to do it and so forth. But if you think about what's good from a travel standpoint is local destinations, right? If you can go somewhere in a couple hours, you go to a park, you go to I don't know, like for us, we go to Santa Barbara, to the wine country, and so forth. I think those areas will do really, really well because we can get to. They don't have a lot of contact, and it's just a change of scenery, basically. Airbnb, I know there's a lot of negatives about Airbnb, but I think Airbnb is a winner here, right? Once we figure out how to get back into normal, I'd rather go into an Airbnb than go into a hotel room.
100%.
Yeah.
Right.
I'll speak from the young generation. I mean, I've booked one or two hotels probably in the past 3 years. Like compared to I couldn't even tell you how many Airbnbs I've been in, and it's just like it's got to be one for every 10, if even that, and that was before all this, right?
Yeah.
Like there's something special about like being able to have a house, have a kitchen, like especially when you're with like a group of friends and all that.
Well, listen, we have to figure out how hosts will clean their homes, and so there's going to be obviously some things that are going to come down the pipe in that sense. But ultimately, I agree with you, right? Like you go into a hotel because there's a lot of people in one place together, restaurant, accommodations, and so forth. You don't want this in this environment. So
that being said, are you trusting somebody to clean their house and you staying in there? That's the thing that worries me. And again,
I can speak from a personal experience. I have a house in the desert that I Airbnb sometimes in by Coachella, and we have a cleaning crew that comes in after each guest cleans the house. You have to do that. Now you have to figure out what other things you can add to make sure they are safe.
Totally, and I trust a cleaning service after. And like an Airbnb host rather than the 100 people that are walking by me in the hallway between rooms and all in the lobby, for sure.
Yeah. I think also here, golf, guys, golf is a winner, right? I think golf was dying for a long time. And it's millennials are not big golfers, but I think they're going to take up to golf. It's like the perfect social distancing sport. I know Ben plays tennis. That's also going to do well, I think. So really, that's the few things I can think of going to be winners. Cannabis is another one I think going to be a winner. We have some investments in cannabis in our firm. We follow the sector quite well, and people have a lot of time, so they hang out and they smoke cannabis. And then I think delivery services, right? If you're home and you don't have a lot to do, you just order things, order food. So I think those are big winners.
Yeah.
I'll give you the bad.
So, I think the first one for the bad is restaurants, first and foremost. You know what I mean? I had a conversation with a couple of clients the other day, and we all sat around and went, okay, when social distancing is over, what's the first thing you're going to do? And while my brain wanted to say, I want to go to a restaurant, I'm going to go to a bar, I don't know that I'm comfortable doing that yet. So I don't know how restaurants are going to tackle this. Maybe they got to cut their, capacity by 50 or 75% or whatever number they choose to create distancing. But how are you going to jam pack a bunch of people into a restaurant right now? I don't think you can. And a lot of restaurants, they're not big like chains, maybe people go to Olive Garden or things like that. But what do you do about the mom and pop stores, which are most restaurants? Can they survive this thing? And they will ultimately have to come up with more things. And I think delivery services is one of those. I think creating an experience for delivery, not just, putting your stuff in a plastic box and shipping it out to you, but maybe a way to get a better experience to their patrons.
I'm so dying to go out to dinner, man.
I know, but are you comfortable doing it? Are you comfortable sitting there going?
They started opening the restaurants in Spain, and what they're doing is they basically allowing only 25% of the people on the patios, 25% of the people inside. So I don't know if the numbers will work for the restaurants themselves, but they're going to figure out a way to do it.
Yeah, I agree. And again, all this is contingent, if there is a vaccine. And I personally think humans, we say all this stuff, oh, we're never going to do that and we're never going to do that. But ultimately, we'll be social distancing at 6 feet, and then it'll be 5 feet, and then it'll be 4 feet, and then we'll forget our masks at home. And this will evolve. The question is can these people survive long enough to get to that point?
Totally. And speaking of the experience, and I'll jump in the ugly in a minute, but speaking of the experience, I'm curious on, because they do the alcohol delivery as long as you get food. And so just to help these restaurants, I will say, like, I just hope they keep that because that's high margin product that helps keep them afloat. And, who doesn't love a good cocktail delivered to your door?
Yeah. And I do think that live events, we've all, we know Coachella and all these things. I think live events are in trouble right now, but they have to evolve also. You can't pack 300,000 people into a small place. Or
what do you make of the Saudi Arabia buying $500 million of Live Nation stock last 2 weeks ago?
I get what they're doing. I get it. They're buying low. Their idea is, listen, we have this sovereign wealth fund that's gonna, this is a 10-year down the line thing, or 5 years, or whatever time frame they're looking at. This stuff will come back. Maybe it's a year, maybe it's 2, maybe it's 3. But ultimately, we are social beings, and music is actually a universal thing that ties all people together. So I actually kind of like the move. I don't know if it's early to make it, but I like the idea of owning.
In Europe, they already have drive-in concerts. They drive in it. Yeah.
So we're talking about drive-in theaters, and maybe those make a resurgence.
They are making a resurgence.
I'd 100% go to either of those. Drive-in theater, drive-in concert, for sure.
Yeah.
Totally.
Yeah. So I think that, and the last one I want to tell you is casinos. So casinos are going to have trouble, right? So, we own some Vegas stocks, and we like Vegas, and I grew up in LA. So I've been going to Vegas since I was, in utero, basically. I think Vegas is going to be challenged on the short term, but ultimately gambling is something that never went away. It's been here since the beginning of time. And I think certain companies like MGM are actually going digital and making online gambling. So online gambling is becoming more and more prevalent. And so I think they have a chance to transition and to change the game. DraftKings just went public, to Sportsbet. So these companies will have a chance to sort of evolve the next stage of the game. And if they do it right, I think they will separate themselves from everybody else going forward.
Last thing I would go to is a casino. So
right now, that's what I'm saying.
Yeah.
So,
and that's you, Atem. How many times have we had this conversation? That's you. I know a lot of people ready to do that.
Yeah, for sure.
And now you're not even talking sports betting as well, which once we get sports back, those casinos trying to figure out the online gambling and all that. Anything else you want to add to the bad? And I can jump into the ugly real quick, and then we'll take some questions.
The last bad I would say for now is Disney parks. But as much as people love Disney, I don't think they're going to have an issue long run. They're definitely having an issue short run. But the second people can go back to Disneyland, I think they're going to do it. I think Disney's going to implement the steps that they need to. They started opening Shanghai. They started, they're going to reopen Florida probably very soon. And so I think that under the right management, and they do have the right management, they're going to do well.
I think Disney will be the bellwether of how this economy opens up.
I agree.
It really, we'll all be watching very, very close. And I know the stock got hurt as a result, although today was okay. But, listening to Bob Chapek and Iger this week, you hear that they're really serious about doing it the right way and not rushing into it because they care about safety, but they're going to figure it out. So
totally. And just legal and getting sued if they open up with too many people and don't have the right precautions in place. Definitely. But I'm with you. Like that's the firm you want to trust to do things right. So jumping into the ugly, we talked about it a little bit, but hotels are in a tough position, and we've obviously seen that reflected in these stocks like Marriott, because you got a few things, right? So you already had the millennials like myself starting to do more and more Airbnb, more and more people buying houses to just rent it out for Airbnb, which they're obviously in trouble right now with Airbnb cutting 25% of their force. But you've already had this trend changing, part A. And then part B is like all of these major conferences is where hotels can kill it, right? Housing thousands of people from companies, like just like they can make so much money. They plan well, they do the food, they do everything like that. And those just, the idea of going to a conference with a couple thousand random people just to go to a conference, that when that can mainly be done online, it's hard for me to imagine that that's a top priority for people to do. I'm a music lover. I see a lot of music, and that's been one of the hardest things through this pandemic for myself, and is not being able to see music. But like I'll suck it up and go to a concert if I need to, and it's safe and all of that. But the idea of like going to a conference at a hotel, that's going to hurt the hotel industry. So that's pretty interesting. And then the other side, so we had Warren Buffett's annual shareholder meting. Speaking of conference,
you had to talk about Warren now.
Yeah, my boy
That's
Warren.
Your hero, man. You gotta.
Yeah, so I the first investment books I read when I was 15 was Warren Buffett. Everyone gives me, it's a compliment. I'll take it that he's one of my idols. And Warren sold all his airline stocks. And not someone who, when you see Warren buying something, you typically assume he's going to hold it for a long time, because what Warren tells his investors is his holding period is forever. And so Warren dumped all his airlines. And I think specifically the airlines that have a lot of issues are those budget airlines. So look at Spirit and Frontier. They just try to move planes as fast as possible. And, your check-in, your check-out, out of the gate, like they're just moving volume, these short, cheap flights. And, they have small profit margin. I mean, so do all airlines really, but they aren't making the big money on, the $5,000 first class ticket, the $10,000 first class ticket, right? Like they aren't making those big margins. And so if they need to have less seats, they need to like rechange their planes, they need to spend more money on cleaning, like they're going to be in a challenging place. And so with that, we actually nailed it pretty well on time. I saw that we had a couple questions, but why don't we give a quick minute if people want to type anything in? And I don't know, I do like the comment from Joe regarding using Airbnb. You can probably trust the superhost a bit more. And I'm sure that I'm sure Airbnb will work on something that has some minimum standard for cleaning if they don't already, but increase that standard. I can imagine Airbnb doing that for sure. So AL or Tem want to kind of just pick them off and then we can go, or you want me to kind of say them out loud and you guys can.
All right, why don't you read the first one?
Sure. From Albert, what do you guys think about 3M? They seem to be struggling at a time when they should be doing well.
Yeah, I mean, other than masks, I don't really know what they do that well, to be honest.
They've had issues before, and right now people are talking about it because of the N95. That's really the only thing. I mean, they're an industrial company in a recession. You don't want to own that.
Yeah, and they own a lot of businesses that are not that exciting at this, in this digital era. I always make the joke about 3M is like, how many Post-it notes are we using these days? So I don't love their business model, and even the issues with the N95 masks have kind of put to light that as big as they are, they still have not great leadership.
Yeah, definitely. I'll take this one if you guys don't mind, but with all that said in this webinar, what can you tell us about how this pandemic will affect our portfolios? What should we expect and prepare for? So that's the big question. And that's really the most important question in my eyes, because that's what all this is about is, making sure that we're doing a good job helping our clients manage their money in their portfolios. Look, we've seen a good amount of volatility, and we got to expect a bit more volatility coming here. This isn't the time to own 100% stocks in the portfolio, and this is why we own bonds in our portfolio to help with the volatility, but just expecting a bit more volatility. We generally have taken a more conservative stance because we think that there is going to be a bit more negative news, more likely than positive news here. So it's better to expect more volatility, but just know that we've taken steps to make our portfolios a bit more conservative through this.
Yeah.
Anyone else want to add anything to that, Tamarael?
Yeah, I would just say, like we always love to tell you guys, we don't know what's going to happen over the next 6 to 12 months. This is uncharted territories like Ben was talking about. But ultimately, we own great investments, broadly diversified, different industries, but with a focus in the places that we really think have done and will do well. And all things considered, for now, although it seems like it's been one of the worst times ever, things have held up decently well, given kind of how the unprecedented level of stimulus from the government. So like Ben said, we expect more volatility, but know that we're here to help you guys and to make sure, number one, that we're trying to blunt volatility, but also trying to take advantage of things.
But I'll add one thing is just kind of go back to the first slide that Ben put up. It's you don't know for sure what's going to happen short term. You have the Fed printing money. There's a lot of things that you don't know, and it's a fool's errand trying to time things up. But what we try to do here, and I think to with a lot of success, is really position ourselves for success and buy the things that we think will do well long term. So talk to us privately, and we'll look independently to what you own and make sure that you own the right things.
Go ahead. So this question, Anastasia, real quick: if given both bonds and stock volatility, are there any non-traditional sectors that might make good for investments? I think that is one we're probably have a private conversation on, just because everything's a little bit different. And then from Michelle, how about the health sector?
We're heavy on health. We made that allocation change about 3 months ago. This is going to be a huge investment for our country and for the world over the next few years. We obviously have not done a lot into it. This is why we're in this position today. So we love health. We don't know who the winners are going to be, because there's going to be a few of them and there's going to be a lot of losers, but we want to own that.
Yeah, agreed.
Yeah, I think in relation to that, like medical companies that stand out, we're generally, go ahead.
No, go ahead. Sorry.
No, are there any medical companies that stand out? Like I think it's pretty hard to predict exactly who's going to be the most successful. So we're mainly using more, multiple companies through ETFs, sector ETFs, and all of that.
I could talk a little bit more in detail about that. There is 3 things that we need to do. We need to have an antiviral. We need to have a drug. We need to have a vaccine, and we need to have a lot of supplies to make sure that we manage this. So you want to own all those 3 sectors, and there is several companies that work on antivirals that probably will be successful. There is a couple companies that work on a vaccine, and a lot of good companies that working on a lot of the supplies that we will need. So, and that's kind of what we own in a lot of our portfolios.
Yeah.
I'll take the cruise industry, cruise line industry. I don't know. I've never been on a cruise. It doesn't seem like it's a good idea.
So it's a good person to ask someone who's never been on one.
Yeah, I've been on a cruise. To give a personal experience, I don't love it in general. I think I always felt a little claustrophobic. I've taken several cruises. I always felt a little claustrophobic on them, and I can't even imagine what I would feel on a cruise line in today's world. So I talking about the ugly in travel, like I think cruise lines have a really, really tough time over the next couple of years, because who wants to be locked in a steel cage with 1,000 other people?
Yeah. Totally. So buying, probably one of the question that we've had the most the last 3 weeks is, when can we buy Carnival cruises, right? And we've been telling people, stay away, because frankly, these businesses are not, they have to change drastically in order for them to survive in this. And you don't want, that's not investing. That is basically trying to,
gamble.
Yeah, exactly. Gamble. And that's not what we do.
Yeah. And in a similar vein, someone asked about Boeing, and Boeing has, there's so many sides of Boeing right now that you could make the argument so much for Boeing or so much against Boeing. Obviously we had all the issues with the planes. We have the stock that's been completely whacked. So it's pulled back substantially. They had a bunch of back orders for planes, but who knows what those back orders are going to look like. And then again, on the positive side, our defense spending has still been pretty strong. Who knows what it looks like over the next few years, but you have the defense side of business for Boeing. And so, Boeing is definitely likely going to be a continued volatile stock. And there's way too many directions that it can go from here.
It's just,
who's buying a
more
plane?
new planes now?
Yeah, who's buying a new plane? Like, why would you ever buy a new plane at this point?
On the flip side, oil is low. That's so like there's just so many. But I agree. I don't love Boeing here. I wouldn't touch it right now. It's just like there's too much that can go wrong again with that. Not to mention they're not even past their 737 issues yet.
Yeah. Yeah.
And someone here asked a question real quick about Q2, asking whether we thought the second quarter earnings would be down significantly. Q2 is probably going to be the worst in our opinion of the quarters, maybe Q3, but Q2 is where we're going to see all the most severe of the sort of downturn because of social distancing, everything being locked down. So a lot of companies are kind of just throwing out their earnings guidance for the next couple of quarters because what can you guide when your business is shut down for 2 months? So we think Q2 will probably be pretty ugly, but the market already knows that. And that's so the market is trying to sort of price in what's happening, and that's why we see this sort of up and down jumps. So expect the next 2 quarters to probably be not very good at all.
So be patient, and that's what you do in these times. You be patient. You don't commit all your capital. You have a strategy, you have a plan. That's what we preach. As we tell our clients is, we don't know what's going to happen. We don't have any ability to see what the next week looks like, but we do put plans together that we know will work for the long term.
Yeah. In relation to that, the last question that we haven't got to is for young investors, is this the time to take on larger risk and benefit from a longer term market recovery? What this environment is amazing for is dollar cost averaging. Like to be putting money away on a regular basis, because we think volatility will likely continue. And as long as you have a long time horizon, which, a lot of our clients do, young investors do, like it's an awesome opportunity when you're thinking long term to take advantage of this. So definitely, if you have the ability to, you have longer term, it can be a great opportunity. So
being the oldest person in the group and managing money in 2008, 2009, those were the best times to invest, even though they were really tough times from a economic standpoint and so forth. But if you had bought or dollar cost average in the market at that point, you've done really, really well. And that's kind of what you need to think of this time,
Yeah. And what tends to happen is, which a lot of people miss, is the market bottoms out before the worst of the recession. So you can look back. I don't know the exact dates of everything that went on in the financial crisis off the top of my head, but you can look at the market because the market looks to the future. And so the market bottomed out before kind of the worst of the crisis. And
market bottomed up in March.
March of 2009.
The recession was over in September. So about 6 months before.
Yeah. So with that, thanks all for joining, and feel free. You can follow us on social media. We have an Instagram page now, Gerber Kawasaki, that you can use, and Twitter. Some of us individually are on Twitter as well. Feel free to reach out to us if there's anything that you want to hear about. And we're super happy you joined, and we're super happy that you trust us to help you.
Yeah.
And
thank you for trusting us.
Yeah.
I know these are tough times for everyone. Thank you for really, we think of our clients as a big family. So, we want to do these things so we can, get closer to you and show you how we're thinking, what we're doing, and so forth. So whatever feedback you have for us, great.
Yeah. And just know that, like you said, the little family thing, I really want to reiterate that, we manage a lot of people's money. We know it's your life savings. We don't take it lightly, and believe us when we say we're always looking out for your best interest and trying to make the most out of this for you guys. So again, thank you, everyone. Always feel free to reach out to us if you have any questions, and we'll talk to you all soon.
Cheers. Stay healthy.
Enjoy the rest of your Wednesday.
Right.